where do we sit for next year? But then you get the big news, of course, of China. So let's start off with that. How does that fare into the opening up of that economy, and how much of a good news story is that then for the market?
Merry Christmas. Thank you very much. I think that the Chinese reopening is the biggest positive that we could expect for 2023. We have been looking at a very bleak picture for the Chinese economy, which is essential not just for the growth of the rest of the world, but particularly for Latin America and also for Africa. So the reopening of the Chinese economy is certainly going to give a significant boost to growth all over the world, but also, and I think it's an important factor, German exporters, French exporters have felt the pinch of the lockdown and the weakening of the profit environment in China, and this is certainly going to help a lot. So if we look at the overall picture, 2023 looks like a year that is going to continue to be very weak in terms of global growth. Certainly, the reopening of China is not going to bring the levels of growth that we saw in 2019, 2018. However, it is certainly going to be probably the biggest stimulus on the global economy that we can expect in a very challenging year.
Daniel, does that mean then we kind of see a new normal when it comes to this growth picture? That this is the new normal? You kind of have muted growth levels. You'd be lucky to find yourself above 1%?
I think you're absolutely right. I think that we are probably going to move into a decade of very, very poor growth in which developed economies are going to find themselves lucky, as you very well mentioned, with 1% growth per annum if they're able to achieve it. And what is more unfortunate than everything else is with elevated levels of inflation. The latest estimates assume that we're going to have still elevated levels of inflation in 2023. So stagnation is a challenge, but we cannot expect significant growth. I think that we're living the backlash of massive stimulus packages that were implemented in 2020 and 2021 that has not delivered the kind of potential growth that many economists expected, certainly not me, but many were aiming at higher levels of growth ahead. That is not going to happen. And I think that what we can expect is very subdued levels of growth, however, not a crisis. And I think that markets are starting to picture that environment in which the situation globally is not of a buoyant level of growth and economic development, but one that avoids a crisis, a financial crisis, and if that happens, is certainly a positive.
Daniel, how comfortable are you then that inflation has indeed peaked and that we are now headed downward in that picture? And how comfortable are we with a market that indeed may react to this in a slightly different way to what we've seen before?
Yeah, I'm certainly not comfortable about the inflation levels being at a peak, particularly now that China has reopened. We have to remember that one of the factors that helped inflation figures come down from June to November was the fact that China was in a lockdown and that consumption of the basic commodities was much lower than initially estimated. So obviously the reopening of China brings inflation back to many commodities, and we're seeing how many of the energy and food commodities, but also industrial commodities, are coming back quite rapidly. So I am not comfortable with the idea of a U-turn in inflation into the second part of 2023, because that would basically entail a massive recession, and that is not the base case that we're working with. I think that we're aiming at a year of very poor growth, but without a significant recession, inflation is likely to continue to be higher, and certainly higher in the core inflation figures.
And quantitative tightening, I mean, that's set to be the next big thing across Europe, perhaps then for 2023, isn't it? And just a clearer path will probably help a long way in setting the tone for the central bank, especially the ECB then.
You're absolutely right. I think that the biggest piece of news flow and the thing that we have to monitor the most in markets in 2023 is quantitative tightening. We have lived 2 decades of quantitative easing. Central banks have always been accommodative. This will be the first year in which we are going to witness central banks reducing the balance sheet, which means 2 things: less liquidity for markets, and at the same time, governments that will have to refinance their deficits at higher costs. So the question is, how will it affect the valuations of quoted stocks and bonds? Because quantitative easing certainly helped in asset valuations, certainly helped in multiple expansion. However, we don't know to which extent quantitative tightening has already been discounted in 2022 and what kind of impact it will have in markets. So we'll have to monitor almost month by month. Also, because we don't know how much will be the extent of that tightening. Will it be $3 trillion, $5 trillion? A big difference that can have a very substantial impact on markets. So quantitative tightening, certainly the most important thing for valuations and for the performance, particularly of bonds in 2023.
Danielle, I'm certainly with you in the context of looking at that inflation picture as well and seeing that as perhaps not the full story as yet. They often say that one swallow doesn't make a summer, but I guess very difficult to say in the winter here in Europe. But Danielle, Lacalle, I appreciate the time. Thank you so much for joining us then this morning. Chief Economist then at Tresis Gestion.